Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Man, was it a long weekend. Spencer Israel here with Joel Elconin and Dennis Dick. All right, the question we're at right now in this market is, what do you do? Where do you go from here, right? If you're not fully invested, where do you go from here? Because we have an OPEC plus deal today. Great. It's not doing a ton for the market. We're at a point now where we're coming off a really historically strong week, one of the best weeks in the history of our market. So where do you go from here? We're going to talk about that, which stocks could catch bids this week, which stocks won't. Earnings season is, of course, coming up starting tomorrow. Really, not like it'll mean a lot, but it'll at least be some numbers. So we'll talk about that, how that could impact things. Our guest today is Alan Brochstein, author of The 420 Investor and founder of New Cannabis Ventures. He will join the show at 8:35 to talk about how cannabis, a pretty nascent industry, could deal with really their first recession since legalization became a thing. So we'll be joined by Alan here in about a half hour or so. I want to throw it to Joel here, and Joel, recap for us what has happened here in the overnight session.
Nice overnight range. We got that higher open on the OPEC deal. Took out Friday's high, 0950, went to 1950, but we turned around on a dime. Fell 102 handles to 27.17 and a quarter. Now we're just back up at mid-range, down 15 handles, so not too much. This early to make this prediction, but the high and the low of the day may already be in here with JP Morgan earnings starting off tomorrow. I think just like Dennis and I and Spencer all had different opinions on the market, I think the market may be calming down here. Crude, as I mentioned, open up at its high for the session, up $2 from the close. Nosedive through Friday's low, 22.03, and now it's up by 3 cents. So still undecided. I just will note that crude had a $6 range on Friday. The big boys were playing on the playground. Gold has recovered from the lows and opened flat, had a dip to 17.2420, but now down by only $6.40. Silver in the red, a little bit more on a percentage basis, down 28.3 cents at 15.77. And Bitcoin taking the haircut. It's down $605 at 66.90. Triple D, I don't know how you felt, but this might have been the longest weekend in the history of my life.
The 3-day weekend with no markets.
What'd
you do on your Easter weekend?
Well, first of all, I woke up yesterday and it was 8 o'clock and I was like, Spencer's going to be so mad at me. I missed the show.
Because you're used to the 2-day weekend.
Yeah. What did I do? I cleaned out the basement.
That's fun. Nice clean basement. That's good.
Yeah, I threw out some brokerage statements from the late 90s. I guess I don't need those anymore.
No, I guess not.
Several walks. Took several walks with Lisa and Perry. Hit the Peloton almost every day. And, didn't do any grocery shopping. I watched Ford versus Ferrari. Have you guys seen that yet?
No.
That was good.
Very good. Very good. And then, Spencer, I started to watch that show that you mentioned.
The Tiger King?
Yeah.
Everybody's talking about that.
Joel's giving the thumbs
You don't
down.
like it? You're the only person that has said it's bad. Everybody else says it's good.
The only person that doesn't like it.
Yeah, no, for real. Because I've had it has to be a dozen people that have said, you got to watch Tiger King. You got to watch it. You got to see this. I have not watched it yet. So Joel's giving the thumbs down. Everybody else I talked to giving a big thumbs up.
Yeah, it's not Joel's kind of show, I think.
Yeah. Animal cruelty is not really my thing. You know what I mean?
I don't like animal cruelty either.
Yeah. So.
Maybe I won't like this.
Okay.
I like animals.
Okay, let's go. What do you got for us, Spencer?
What do I got
how was Spencer's weekend? Stop. We're going through the weekends. I want to know what Spencer Israel did on his Easter weekend.
I'm being honest. I didn't do much. I spent a lot of time yesterday, thinking about how and I'm not, I don't mean this as a segue. This is honestly what I was doing. I'm trying to think about what I'm going to do with my uninvested cash. That
Me too.
I spent a lot of time thinking about that yesterday, trying to figure out, okay, like what do I want to buy, and more importantly, when do I want to buy? I know what I want to buy, but when do I want to buy it is the question. So I was doing some research yesterday and just looking at, a different.
Did you get a stock list? Did you get a list of stocks you want?
I have a list. I have a list of how many.
Give us your top 3.
How long is my list?
What's the Spencer Israel top 3 stock picks that he wants to buy on pullbacks?
So there were two stocks. I've wanted to buy Microsoft and Square for a while. Haven't bought either of those.
I sold Square on Friday.
Oh, okay.
That was just a ridiculous rally, in my opinion. And the reason I sold Square, not that I don't love the company, it's that it is retail. And this is in retail terminals, and I gotta think that their numbers are going to just be terrible for the next quarter, because obviously, maybe not the first 2.5 months. I guess you're good, but I got to think they're going forward. Obviously, the second quarter is going to be an absolute disaster, I would think, for Square, because they were retail. And they're all, this isn't like, something online where, you have a lot of still online sales. Square is mostly those terminals that are in the retail
it's small.
stores.
It's all small business. But it's a lot of small business.
And the rally in the last, so I had this, I bought it back at 60. I sold half of it up at 80. I wanted to sell the other half and I didn't. And then I watched the thing tank all the way down to $32. Well, it's come all the way back. I knew there was some resistance at 60. I tried to get out the first time, just around 60, only got 59 a quarter. I missed by 50 cents. Then I watched it fall another 17 points down to $42, looking back in April. Well, the last 5 days, Squares went from 42.33. It got up on Friday to 64.94. So you're talking about a stock that went up, what is that? Over 50% in 5 days. The stock rallied 50, is that right? 42? Yeah, because 22-point rally. It went up over 50% in 5 days. I'm like, okay, that is my out. And I think it did reverse on Friday. I think that the stock chart itself reversed on Friday, 64.95. I actually got out near the high somehow. I got on the 63 handle on that run up. So I look at it now, and I would love to get Square back, but I think I get a shot under 50. So this is going back on my buy list. I'm going to add it right now. It's basically scalping my long-term account, but it was just too much too fast, in my opinion. Putting Square back on the list. I want it back, but I want it. I'd love it in the low 40s again. Don't know if I'm going to get there.
Yeah, so Square and Microsoft were the two names that have been on my list, and then I know you're gonna yell at me here, but I was also looking at MGM.
You know what? I won't yell at you. It's speculative at this point in time.
It is very speculative.
People will get mad at you for saying that, though.
Yeah, I know.
MGM
people are gonna get mad at me.
With a 3.96% dividend,
right?
Casino that's been around forever. I've stayed at the MGM resorts in Vegas a lot of times. Beautiful resort, beautiful casinos. Still, the business is, the business itself is not their fault that everybody, is scared to go into a hotel or to a casino. Until we get some light at the end of the tunnel there, I'm going to be hands off on that, just because, and that's why I call it speculative this time, because we don't know how long the lockdown is going to go for us. So this is ground zero, and I'm staying away from the ground zero stocks. I'm buying pullbacks, but I won't be buying a pullback in MGM.
I agree. It's on my list. I didn't say I was going to buy it today, but I like the fact that it has a dividend. It's a new dividend. They've only had it for a couple of years. The yield is artificially high because their stock price is so low. But at least they have a catalyst to get out of this thing and potentially grow the business. I'm talking about sports betting here, so I don't know. It's on my list. I'm interested. I just don't know where and when I want to buy it.
I could get interested in the casinos at some point in time, but and maybe now is the time, because when there's light at the end of the tunnel, it starts to be a lot higher. But I'm still concerned on debt issues here and the companies that are in ground zero that could potentially. I don't know if MGM's going to need a bailout or not, but I don't know they don't. They haven't said anything about it, but if you stay closed for a prolonged period of time, I've got to think that there's going to eventually be some issues where we might need some cash. So that's why I stay away from those stocks. But at the same time, if we start to see like a cure or a therapy that works, maybe everybody will be scrambling at that time. But that I'm scared of those stocks. That's all. There's lots of other
So,
places where I'm a little bit safer. That's all.
so this brings us to what we were talking about on the pre-market show, which is which stocks could theoretically catch some baits here and which stocks won't. MGM is one of those ground zero names that probably won't, but other stocks.
It could. I mean, these are the stocks that went up the most, Spencer. So, I mean, you look at MGM, $5.90 back on March 18th. Here we are.
16.
We're $15 here. You're talking about a stock that's up 200% in 15 trading sessions. So that's why I was arguing. Who was our guest on Friday from Piper?
Yeah, Craig Johnson.
That's why I was arguing with Craig, and he really talks well. Like he was really gave his point really well.
Was he convincing? He had me ready to go buy out right then.
He was very convincing, but it didn't convince me. And the main reason was he was pointing out some of these stocks and saying, look, a lot of these, stocks, and, he was given DRI as an example of a stock that could really, go up significantly from here. I'm just arguing $26 on March 18th. It's 64 now. It's already went up very significantly. It's up 150% from the lows. Now you start to get back where if you're going 64, 65, you start thinking, okay, well, you get, $70 at the 50% retracement. We know the overall market appears to be struggling at the 50% retracement. I'm sure Joel will talk about that in a minute. But some of these stocks have already had significant rallies. I mean, DRI in the last 5 days, just like Square, it's went from 43 to 65. You're talking about a stock that's up almost 50% in 5 trading sessions. The easy money's been made in the long side, in my opinion. Now I need a pullback if I'm going to jump into these. Like some of these stocks, you're going to get some pullbacks, and this is my strategy going into this earnings season. I'll tell you, and I've talked about this before, I'm sitting with a lot of cash. I bought a few stocks, but not nearly enough. I'm probably going to be along with everybody else. Just like we said on Friday, I will be looking to buy stocks along with every other money manager on pullbacks on their earnings. Starbucks gave you an opportunity on Friday. Didn't pull the trigger, shoulda, but it got down. If you show that Starbucks chart, after hours, I think a $68, 68 and change, and closed near the highs. So that one would have worked perfectly. If you're buying companies that, are of, fairly okay quality, or like pretty good, like Starbucks, I don't think is going out of business anytime soon. Like I feel safer in a Starbucks than I do in an MGM. I think you get a pullback on like, a disappointing quarter or they say something fairly negative about Q2. You get 5-6% pullbacks, maybe 10% pullbacks in some of these stock cases. I think the pullbacks get bought, and I will be trying to buy the pullbacks on a lot of these different stocks as we come into earnings season. So I'm a buy the dipper. Buy the dip hat is back on, at least for now. Not saying that the market's going to continue to rip from here. The market's already ripped, but when you get the market flat, you get a stock pulling back 10%, it's giving you a second shot to get a stock at prices from 2 or 3 weeks ago. That's the shot that I'm going to take to try to redeploy some capital. And I'm sure, I don't think every single stock is going to rally on their reports. So there will be some that dip. You're going to maybe have to be quick, but I will be looking to buy those dips.
Yeah, I mean, that's just the question here is for all the people like me and you, Dennis, who have money on the sidelines. Yeah. It's like, what do you do with it? If you didn't already invest it, A, what are you waiting for? And B, now that you missed the first big move, now what do you do? I don't know.
You buy pullbacks.
Yeah.
That's what we've been doing. I mean, and I've bought a little bit, not nearly enough. I was hoping for a better pullback, but you that's what everybody's doing. That's why this morning, overnight, the same exact thing. It's Groundhog Day here. We're not worrying about, the negative catalyst right now. FOMO, Craig was absolutely right when he's saying that the FOMO is the biggest fear out there now, and it really is. Right now, everything could change in a week. The way these macro headlines come, everything could change very significantly, but I'm somewhat uncomfortable to be 70% cash here right now. At the peak, I might have been up to 75 or 78, maybe 80. I don't sit down and analyze that closely. Like I said, I've bought about 7 or 8 stocks since, in the pullbacks here. I bought 3 or 4 when we're down at 245, which I wish I would have bought them all then, but hindsight capital's 2020. I did not foresee the rally that we saw last week. I thought we were going to have a lift. I didn't think it was going to be 25% type lift. So, which, was an incredible, run up here in the market, or whatever it was last week, 25% off the lows, but whatever it was, like 17 or 18%. It was a huge rally last week. So I did not.
All right. I gotta. This is just too much here. I'm buying puts. on everything you guys buy.
Joel is going to give us
Not-
some reality check. Give us a reality check. I want to just be clear before you go your point. I'm not saying I think the market's ripping higher from here. I'm saying maybe we have some work to do, but if we pull back on a stock 10%, it's giving me a shot to buy the stock at the prices it was two or 3 weeks ago. So it's like I'm buying back at 245, 250 spot. So that's why I'm looking at it from that perspective. I don't know where the market goes. I'm not buying SPY right here at 277. So I'm not full on the market's ripping up to new highs, but I will buy pullbacks. That's what I'm saying. So give us a reality check though, because it sounds like you're buying nothing.
No, I will. I'll look at some different things. Just a lot of different factors here. I think maybe 8 months, 12, 10 months or something. I think that you can look from the fallout and you can see what new companies are going to emerge from this. Just like you had during the internet bubble and the tech, the financial crisis, new companies are going to emerge, new sectors are going to emerge, and I'm going to wait for those companies. I just feel that also you have an election year coming up, a lot of uncertainty here. So I would just be more content to wait and see because maybe I'll miss the V bottom. I'm very comfortable with, I didn't quite do what you did, Dennis. So I didn't, I'm not in that kind of cash position here. But I just look at the potential negative earnings. I look at the potential negative GDP. I look at the potential bankruptcies, and I don't need to chase. And I think I think it's going to take maybe Q4 or something. I think things are going to, how are these companies when the entire economy shut down? Let's say tomorrow we went back to normal. Tomorrow. That's what I feel like the market's pricing in. I think it's going to take, you look at these declines that we've had, and it's take a long time to recover. And I think this one is a real kick in the pants because it is affecting everything. It is affecting restaurants. It is affecting airlines. It's affecting cruise lines, casinos. It's stores, restaurants.
It's everything.
How many people are losing their jobs? Who's going to spend money to make this economy turn around and go back to 3 or 4% GDP? People are losing their jobs. People are losing their houses. Buildings are going to, REITs.
People are paying rent.
People aren't paying rent.
Oh, yeah. The REITs are just going to get, they're already getting slaughtered. So
you're talking what I've been talking about for a long time. And I just want to clarify with you because I come on and you listen to a 7-minute rant about buying pullbacks. It sounds like I'm full on bullish. This is not the case.
I know.
I am not buying SPY. I am not chasing. I'm with you. I am not chasing. There's people that's telling you to chase this market. I am not one of those people. We may be wrong, because I think you're saying not to chase too, obviously. I'm not chasing. I'm saying if I get a 10% pullback in an individual stock, I will buy that pullback. Not on MGM, not on Carnival Cruise Lines, but if like Bank of America pulls back 7-8% on their earnings report, it gets back down to $23, $22, I might pull the trigger on some stock just to redeploy some capital. If, we're looking this week earnings reports, it's mostly financials. But AMD pulls back significantly. Let's say, it just gets rocked. It's down like $42, that low. Well, and then I'm getting at a price when SPY was at 242. So it's like I'm buying the stock at SPY of 242. You get what I'm saying?
Yeah. I want to say one thing, one final thing, and then we can move on to some stocks. Okay. For Spencer, what are you, 27, 28?
One of those ages.
Okay.
One of those.
It's a multiple choice question. Spencer, no doubt you have to be doing it. Okay. Dennis, you're what, 41?
I got a few gray hairs here going.
How old are you, Dennis?
I don't even know. I have to go look it up. No, I usually ask my wife, but I'm 43.
Okay. All right. So you also, your investment, horizon is different.
Probably
than
still
mine.
20 years.
Okay. All right.
I hope.
All right. I'm 57.
Yeah.
Okay. So, different stages, I know we have listeners of all different ages and incomes and stuff like that. You got to look where you're at on your investing horizon. Right.
Yep.
And I think that for what Spencer's saying is absolutely correct. And I'm going with what you're saying you're correct. But I look at anybody that, let's say, is 74 and they didn't do anything at the top and they didn't do anything at the bottom. Man, oh man, I would look at this. I would look at this level. I would look at this week. I don't have to necessarily do anything, but I would be on guard. I think it's, for anybody over 70, or near retirement or buying a house, but no one's buying. Oh, I forgot the housing real estate market and the home builders. I forgot about them. I think you have to look at this and evaluate, are you going to be comfortable if the market goes back down to 2,400 or if it goes up to 3,100?
Analyze. Joel's giving, like, obviously, we don't give investment advice, but he's giving good information here, and you need to analyze your personal situation. If you're 75 years old and you're sitting with too much equity, this rally is a gift. I completely agree with you. If you're sitting like me and Spencer Israel with a little bit too much cash, we were nervous in January, I raised it up. I need to redeploy some of that because I don't know that we aren't going to V-bottom. And I don't want to be sitting with 70% cash in my situation if we do V-bottom. And I'm telling you how I'm going to do it is I'm going to buy some individual stocks on pullbacks. I'm not buying the market here. I'll be buying some individual stocks, with many companies that are going to report over the next 3 or 2 months or month and a half. There's definitely going to be some opportunities. We've already saw Starbucks and Costco both had significant pullbacks. That both of those pullbacks were bought very quickly. Everything might change. If I start seeing, and we're seeing reports, this is the scary stuff, that we got to talk some of the scary stuff too again, of people getting reinfected in South Korea or potentially maybe never having gotten rid of it. It just was hiding from the test results. That's scary. If you see China, and obviously the data coming out of China, we don't know we're going to be able to believe it. We probably can't, but you start to see cases start to increase as the places get open. That's scary because then how the hell do we get out of this? So those are the situations where, I would be like, okay, I'm going to start selling stocks again. But I'm still got my buy the dip hat on and sell the rip hat on. So despite my bullish little rant that I had this morning, which is probably the first bullish rant I've had on the show in a long time, which wasn't a bullish rant, it was a buy the pullback rant, I sold Square on Friday. Why did I sell it? Because I'm selling rips, buying dips, and you're being rewarded for doing both of those things in this environment. So not buying the rips and selling the dips. That's how you lose money in this environment. It's been buying the dips, selling the rips. It continues to work, and that's how I'm going to continue to try.
And purely technical. I just, great day yesterday or Friday or Thursday, whenever the hell that was. Good poke today. Give me 3-4 closes above 27.86, during this earnings season. Let me see that you're going to hold that level. And then, then you can look for, 3,000 or 3,100. So I think it's, just putting my technical hat on, I'm saying, hey, the market's telling you, you had a close at 79.75 on Friday. Thursday, they goosed it a little bit at the 5 o'clock. We've been all over the place. So, technically you had your dip, you've had your rebound, you've had your 50% retracement. And if you're going to hold here, and I know what you're saying, Dennis, you're looking for a pullback. And I know exactly, you're not going.
I'm not buying a 277.5. I am not buying up here because we've run too far. That's why I sold Square. I've sold my Square to buy it on a pullback. I think we will get a pullback in some individual stocks. I think we will get a pullback eventually in the overall market too, because I don't think we're going straight up. I don't think we are V-bottoming. We might. I don't know that we're not. Nobody knows anything. Muhammad Al-Arian is on CNBC this morning again. I'm going to tell you, he hits the nail on the head every time he speaks. And we've had him on the show before too. We should get Muhammad back if we can. He's probably in high demand right now, but that person, he's like, we aren't doctors. We aren't, we're investors and we don't have a playbook for this. So he is basically saying nobody knows exactly how this is going to go, but there's high uncertainty. So if you're nervous about the uncertainty, I'd say now is the time to lighten up. I'm on page with you. I'm on board with you there, Joel. If you're nervous about the uncertainty, I'm nervous about having a little bit too much cash. So that's why I'm buying pullbacks.
Okay.
Stock pulls back, I might nibble.
All right, let's talk oil. Let's talk oil because someone asked about oil stocks here, and I think it's really interesting. Not last week, but the end of last week when we were talking about the OPEC. They jammed it, I think, to 28 and change. And then after hours a week ago, Friday, they took it up to 29 bucks. Okay. $6 range on Friday. Thursday, I can't wait till this is over with. And they settle it.
Over.
They settle it near the bottom of the range. You get the deal. Faded the living hell out of that open at 24.60, hit 24.74. And I was talking about this with Spencer. I mean, Spencer's like, well, you've changed the supply equation, but demand, no one's going anywhere. No one's using oil, and oil was already on the decline before the whole thing happened. So I still think I'm hands off on the energy sector. Dennis, what about you?
Completely hands off. And again, I'm going to say I'm not buying any stocks or any sectors that were in trouble before the crisis began. Oil was in trouble before the crisis began. I mean, we were back in March and you were sitting near the lows, and how weak can these energy stocks get? Well, now you get a crisis. You look at Halliburton. It was going straight down for the entire month of February before even most of this stuff began. But, even you look at January, start of the year 25, we went down for a month and a half when the market was going straight up. The market was going straight up until, if you bring up the SPY and look at it coincidentally, the market was going straight up till mid-February. Well, Halliburton, Schlumberger were going down at that same time.
Hey, can I break in here? Airlines deciding on Treasury grant offers. I just saw that. I very rarely have CNBC on, but they were talking about no layoffs until September 30th. Delta goes to junk status. I just wanted to throw it. We'll cover the airlines.
There's a lot of news all the time in the airlines. The biggest thing that we need to know is what is a bailout going to look like, because they are going to need a bailout unless we open up the economy next week and everybody goes back to normal. It's highly likely that the airlines are all going to need a bailout. I don't like buying companies that need a bailout because I saw how it went down in the financial crisis, and the terms were not good for the companies that needed a bailout. A lot of the stocks never, ever recovered. AIG never recovered. You can look at the all-time high on AIG. It's probably like $2,000 or something like that, or whatever it is. Like, what is it, Joel? We got to give this perspective again, because people really believe that if they get a bailout, the equity is just going to go straight back up. And I believe those people are wrong.
Yeah, good call on that. 2066.72, 2066, and then Citigroup.
You have 1% of your money in AIG. So if you bought the stock back, when the AIG was needing government money to not fail, you are 12 years later now, and you have 1% of your money, 1% of it. You've invested $10,000, you got $100 back, $100 left. That's what a $2,000 high means. $10,000 investment's worth $100. That was company. Fannie and Freddie, same story. Citigroup, same story, Joel. Bring
570.
570. So, okay, you got on your $10,000 investment of the all-time highs in Citigroup, and maybe you bought it at half price or whatever. But if you bought it at the all-time highs, you got $100. 12 years later. A few companies, obviously, went bank. GM, you had nothing. I mean, GM reorged, went through, and obviously, Chrysler, same thing. You had the equity shareholders get wiped out. So companies continued. And this is a good point too. Why not? I watched a video, I forget who the gentleman was. I retweeted it though on the weekend, was arguing for letting these companies fail. Why not? Why not let them fail?
It was the guy from Social Capital on CNBC. Yeah.
And you know what? I agreed with everything he was saying. People get probably pissed off that I'm saying this, but when he's right. When companies fail, it doesn't mean these companies cease to exist. Boeing's not going to go away. It just gets reorged. The equity shareholders, the speculative capital gets wiped out, and then you have the debt holders that, often in the case of GM, get a huge chunk of the stock. So it just goes right back to, debt is obviously better than equity in the event of, a chapter or the event of bankruptcy. But we're not saying the companies are folding up and closing shop. GM went through a bankruptcy. The employees, most of them still kept their jobs. Yes, some of them had to take some pay cuts, but they were still getting paid pretty well. There's a good argument out there that why should the taxpayer bail out a lot of these companies? When we didn't bail out Lehman Brothers, it was a problem because the banks are all in bed with each other, and you got grandma's insurance payment that's not going to pay out. I mean, there's issues there. Same thing with AIG. Can you have, grandma's life insurance policy not pay out because of housing, because of
No.
the financial crisis, pretty tough. But can you let a Spirit Air or can you let one of the or two of these airlines fail? I'm sure, that they're still probably going to continue to operate, even in the event that the equity shareholders get wiped out. Really a bailout, and in the terms that that everybody wants is they want the equity shareholders to get bailed out. I don't think the equity should get bailed out. If you're buying these companies, you're putting speculative capital to work at this point in time. And if, the deal, is seriously dilutive, then you should, or if they want to take them through a bankruptcy, if they don't get a deal, then you should get wiped out because you're putting speculative capital to work. So you're speculating on it. I mean, yes, there's some employees that own stock, but again, the gentleman from that was given the argument is that a lot of employees don't own as much stock as you think. So a lot of some of them do, and that's sad and that's tough. But again, that talks about diversification in your portfolio as well. If you're taking some and diversifying even out of the own company, if you have all your eggs in one basket, it's your own company. I mean, you are somewhat speculating as well that your company is going to continue to perform very well. You don't have to keep all your money in that company. But I would argue, I think the guy made a good argument that maybe we should just let some of these companies fail. Just because if Boeing had to go through a bankruptcy, it doesn't mean Boeing's going away. It just means it's going to reorg and potentially come back a lot stronger. GM went through bankruptcy and they came back a lot stronger. Yes, they're having some trouble here again now, but we're in another crisis. I don't know if we should bail them all out.
You know what kind of came out? Just an example of a bankruptcy that if you would have held through it, remember when U.S. Air went through that bankruptcy and then weren't they acquired by American Airlines or something?
I mean, sometimes you see that happen.
That's rare though. That's rare.
I just want to clarify, and I think that gentleman that the video I retweeted, if you follow me in Triple D Trader, I retweeted it, was making a very valid point, is that a lot of these companies that potentially go bankrupt will not go away. If you just say Boeing, we're not going to just give you money here. You'll take, some dilutive term. If I was a taxpayer negotiating, and Mark Cuban said the same thing. He's said, and he's exactly right too, that if Boeing wants a sweetheart deal, okay, go find it in the private markets. The government should not be giving sweetheart deals. They should not just be handing out money, taxpayer dollars, when we're printing money and giving trillions of dollars. We're going to go further trillions of dollars in debt here. They should not just be handing out money to every single company that needs it. They need to be on terms that the taxpayer can eventually get repaid. They did a pretty good job through the financial crisis in a lot of those cases. A lot of these companies, that the deals that the government made on some cases, and not all of them obviously, but in some cases, they got paid back. But that's what needs to happen. The terms need to be fair to the U.S. taxpayer. And if they're coming at terms that are sweetheart, I don't want the government giving sweetheart deals. Let Boeing go to the private sector and try to find the money. Carnival just went to the private sector. Carnival went private. They found some money. So it's might be out there. Why should the government have to be the one to bail them out?
I think the argument that Scott Wapner is trying to make was this is nobody's fault. So why should you let anyone fail when it's not their fault?
Well, you can argue that all you want, but this is business and things happen in business. It's nobody's fault that a lot of the airlines did a lot of buybacks and didn't save any money for a rainy day. We're 3 weeks.
Oh,
3 weeks after this started happening, they're already asking for money. You couldn't survive for 3 weeks.
A week. They couldn't even wait a week.
You couldn't wait a week?
There.
I mean, sure, Delta, you're burning $50 million a day, but let's talk normal. A month and a half ago, you're operating normal business. Here you are 6 weeks later, and you already need a bailout. You couldn't survive. You're operating paycheck to paycheck. Can't you save some money for a rainy day? Well, if you didn't do that, go to the private markets and find it. Carnival found some money. They had to do it at some awful terms, but they did find some money. And there might be some private investors out there that are willing to give you some ugly deals, but it's capital that could keep you surviving. I don't think the U.S. taxpayer should have to be the one to foot the bill on everything. I think the U.S. taxpayer should be worried about themselves right now, because there is a lot of people that are in their own world of pain right now. Main Street is in a lot of pain right now. A lot of people live paycheck to paycheck. A lot of people don't know, or they didn't pay their April rent, or they don't know how they're going to pay their April or rent.
A third of people didn't pay their rent in April.
That's an unbelievable stat. That's true. But that's the people we need to worry about here right now. Even the small businesses, I'd be more worried about them. But big business should be able to find some money. And if they can't, then let them fail and let the company's debt holders come in and figure it out how to reorg to make the company come back stronger.
I think the solution to all this is maybe the airlines need to take up a side hustle, like driving for Uber or Lyft or
Consolidation. I mean,
Yeah.
that's, it's going to be Delta and United or American. I mean, that's the only way
They might
they're
have to do that.
Yeah, that's the only way they're
We
going to
saw it
survive.
in the banking industry.
Yep.
That's how they, Wachovia, how many banks got, consolidated to try to survive?
Jeez.
You had Bear Stearns. That was, you had the huge investment banks, and most of them went away. Merrill and Bear Stearns both had to get consolidate to go higher. Yeah, obviously JP Morgan and Bank America buying them. Bank One, remember Bank One existed? It was having trouble. You had Wachovia. There was a couple dozen, like major financial institutions.
Washington Mutual.
Countrywide Financial.
Countrywide, yeah. Yep.
You know what? All of these, some of these, and Lehman, they let fail. And the big difference was it was difficult because if you let a bank fail, like I was saying, or you let AIG, how do you let AIG fail? You can't let, they have all these insurance policies that aren't going to pay out. Well, that's a completely different story than bailing out, like a Spirit Air or
Royal Caribbean
airline.
Yeah.
It's a different story. You're going to affect those employees to a certain extent, but those employees might still have their jobs and the companies could come back stronger. General Motors came back stronger. And in my opinion, they came back stronger with a hell of a lot less debt, and the debt holders just became the shareholders in that case. I mean, I'm not, sitting there and telling them analyze the whole balance sheets, but for the most part, that's the way it's structured, is that the debt holders can come on and then they figure it out. But the equity shareholders get wiped out. I mean, that's not that bad of a thing. It's not as bad of a thing as everybody makes it out to be. At least, it's bad for the equity holders, but
well, obviously. All right.
But if you're putting new capital to work on bailing and you're banking on a bailout, and you don't get it, well, then that was your risk
and your reward. All right. Let's transition here a little bit. I want to bring on our guest, Alan Brochstein. He's the author of 420 Investor. He's the founder of New Cannabis Ventures, and he's going to give us an idea of how the cannabis industry is going to deal with what is essentially the first recession that we've had since cannabis started to become legalized. Alan, good morning.
Hey, I'm trying to get my video to work. There we go.
How's it hanging, Alan? You staying safe?
Oh yeah. For me, I guess fortunately, it's not really a big change. I live in, I have a wife, but I live pretty much in isolation anyway.
Isolation. Yeah, you and Dennis both, I think.
We were ready, from a mental perspective.
Yeah, no, this is really, everybody has to come to my way now. And I'm not saying it's a good way for others, but it's fine for me.
So Alan, what are you seeing with regards to how at least the public side of the cannabis industry is dealing with the impending recession that we haven't seen since cannabis really became an investable asset for a lot of people?
Right, that's true. So really, the public stocks really started in 2013, and I'd say the modern public stocks really started in 2018, and so this is the first time that the economy has been a big issue. And of course, there's inelastic demand on one side, but then there's an ongoing problem on the other side, which is the capital crunch. And I would also say inelastic demand is going to be tested. We've never seen anything like this. So right now, a lot of optimists are kind of clinging to cannabis companies have been deemed essential in almost all states. There's been a spike in sales in the short term. Sure, people were stocking up, but as this economic scenario plays out, it's going to be really hard. But even looking beyond, trying to decipher the future demand trends, we were in a capital crunch before this started. And I heard Dennis saying about let everybody fail. Well, there are going to be a lot of failures in the cannabis sector, unfortunately. And, the better cannabis companies were already doing things like sale leasebacks and accessing the debt market, which is very difficult to do. the rest of these guys are going to really struggle. So, in the United States, I think the very largest, what they call multi-state operators or MSOs, are probably the best positioned, and they may have to retrench in certain markets, but they're probably much better positioned. If you're a cannabis investor and you own an American cannabis company, there are a few that are not in those biggest four that I think have a good chance because they have strong balance sheets and generate positive cash flow. But I'd say the vast majority of these companies are in big trouble. And then up in Canada, it's a little bit different. The largest companies, and we saw some news on Aurora this morning, it's really the largest companies that face a lot of challenges, because these were empire builders that had money thrown at them left and right, and now they're trying to manage these massive global empires. They're burning cash left and right, and so it's pretty challenging. And beneath that, the things that were going to help Canada, like the rollout of stores in Ontario this year, look to be delayed now. It's hard to envision that they're going to open up the stores as was expected. So it's a very tough time.
Just to be clear, the big four that you mentioned, that's Canopy Growth, Kronos, who else?
The big four, no, that was the MSOs, and the four biggest MSOs alphabetically would be Cresco, Curaleaf, Green Thumb Industries or GTI, and TrueLeaf. Those are the big four.
So
up in Canada, there's 5 really big companies by market cap, and alphabetically those are Aurora, Canopy. I don't want to miss any. I missed one. Aurora. Oh, I should have started with Aphria, Aurora, Canopy, Kronos, and Tilray.
Right. And that news you mentioned this morning on Aurora, they said they have $205 million in cash on hand. Their revenue for Q3 will grow on a quarter-over-quarter basis.
Making progress on cutting costs. But, the Aurora is not alone. Even Canopy Growth faces some of the same challenges. They're lucky they have the strategic investor and have a lot of cash, so they don't have a gun at their head. But we've seen Tilray just slam the market at a desperate price. And, what Aurora said today was, hey, we're making some progress here, but we got a problem. So we're going to reverse split 12-1 so we can keep our listing on the New York Stock Exchange. And we're going to do more equity offerings on the ATM. They've expired their first ATM, so now it's ATM 2. And so, not to pick on Aurora or Tilray that had to do this, this is widespread across the industry. And I've been telling people, 420 Investor, be very careful in this market. Everybody is going to raise capital. Some of the people have to raise it or they'll go out of business. And some of the stronger companies are like, hey, let's raise capital. This is a great time. We can raise capital and we're going to use it smarter than these other guys. And we're going to buy them pennies on the dollar. This morning, a little teeny tiny LP, which had already sought creditor protection, it looks like they're not going to get anything. They put out a press release. This whole company is looking for $12.5 million bids. And I think that's just to cover their debts. And, I think what it tells us, it wasn't that long ago that these analysts in Canada were telling us a license was worth $100 million just to have a license. Now it's zero. And Health Canada is handing out licenses like candy on Halloween. It's crazy, but there's 355 now. They handed out, I think something like, I don't know. They handed out 5 licenses last week, 8 the week before. So no, licenses are worth nothing. So what's worth something right now is positive cash flow. And if you're an investor, you need to understand what that is and go look for it.
Do any of these Canadian companies have positive cash flow right now?
Do any of them?
Any of them?
Yes. So cash flow. So Valens will be reporting this week. Valens has reported positive cash flow. I'm not sure that they will this quarter. I don't follow them as closely. I may cover them more closely. But they're an extraction LP, a little bit different. They didn't try to, plant 600,000 plants like Aphria did. But so it's a little bit different. But so generally speaking, I'm not aware of any Canadian companies that have positive cash flow. In the United States, I can tell you, I've written about some of the simpler stories out there. In 2 of them are in Florida. One of them is a big company, TrueLeaf. It's one of the big 4 that I mentioned. And a smaller one is Liberty Health. These guys have positive cash flow, but they're operating in one state. You have to remember all these empire builders and most of these larger MSOs too, they're out there winning licenses, doing deals, building. And so they may have positive cash flows in their more mature assets, but at the corporate level, they don't. But with that said, so GTI, Green Thumb Industries, is one of those big ones, and they just reported. They haven't filed their filings, but I can't remember if they provided a cash flow statement. But in the prior quarter, they had positive cash flow.
Just to be clear, Alan, how is cannabis as a product classified? Is that like would you call that like a defensive product?
Yeah. It's like, nicotine and
Okay.
coffee and I guess nicotine's tobacco. Sorry. Yeah, alcohol is what I meant to say. Alcohol, tobacco, and coffee, things like that. These are things, look, I'm going to be the very hard line on this. I don't think people get, quote unquote, physically addicted to cannabis. There's a big argument about that, so I don't want to get into it. I don't agree with it, but I would admit that some people are habitual consumers of it, and they can become psychologically dependent. And so, a lot of people can't give it up. But at times like this, I got to tell you, I don't know how you guys feel. My life is okay, but I'm still depressed over what's going on out there. I have a son who lives in Brooklyn. I'm scared for him. A daughter in Kansas. I'm scared for her. People are losing their jobs left and right. People, the small business owners, I know you were talking about them, that I know are at risk of losing their business. So I feel, my sleep is being impacted. Cannabis helps. So I think, in times like this, in general, in a recession, people will continue to consume these types of products. While we know that nobody's going to the movies right now, for instance, or taking the cruises, like you said. So in that discretionary bucket, things like cannabis should hold up better. But this is an extreme test of that theory.
Right. And so you're seeing a lot of headlines about so-and-so company has record sales, blah, blah, blah. You're not putting a ton of stock in that?
No. There was a spike. Like, everybody kind of figured out, just like toilet paper or whatever, that they want their cannabis and they might not be able to get it. So they bought as much as they could. And there's data out there that shows, like in Florida, there's very clear data that shows there was a run up and a pullback. It's not like it's plunging or anything, but there've been a couple of instances. Like, let me tell you a horror story. Well, there's two bad stories. One's a horror story. So Massachusetts, which has been just a terrible implementation of medical and adult use cannabis, I guess because they didn't want people from New York to drive up there and bring the virus, they closed all their recreational dispensaries, limiting it only to medical sales. So that's a problem for certain companies. But the horror story is Nevada. And Nevada, of course, they deemed it an essential service. So that's good. The stores, though, were forced to do delivery. And I don't even know if they can do curbside, but they're forced to do delivery, I believe. And
is that legal? Are they allowed to do
legal?
That? Delivery? I mean.
So I'm trying to remember. I don't know if they had delivery, but so in certain markets where there wasn't delivery before, they're doing it on the fly. So they have delivery in Las Vegas. So think about, like, take Planet 13. This is a company that has done a fantastic job in Las Vegas catering to consumers. They have 10% of the Las Vegas, I think maybe it's all Nevada, sales from a single store that I visited. It has high prices. It's a cool place. Well, nobody's going in that cool place, and they've shifted to delivery, and they're putting up a brave face saying how they're going to serve the local market. But hey, guess what? The local market is so dependent on tourism there. I feel so badly for anybody that lives in the Las Vegas area, because that economy is going to get hit like the cruise lines. It's that economy is built on tourism, and there's no tourists, and I wouldn't expect the tourists to come back in great size very quickly there. So you have a lot of companies. That's a big market for these cannabis companies in general. It's a place to test brands and build awareness with consumers. So that market's essentially dead for now. And Planet 13 being the poster child. And that company, we'll see. They you asked about positive cash flow. They've been a positive cash flow company, but I can't call them one right now. I don't see how they can do that.
Right. Yeah. Have you heard anything about how the industry could potentially be impacted or helped out, I guess, by the federal stimulus or
Yeah.
whatever you want to call that?
Yeah, so it's unfortunate. Up in Canada, believe it or not, they told I forgot what it's called, but the $40 billion fund, whatever it is, was told cannabis companies no, and they reversed. Fortunately, unfortunately in the United States, it's going to be a no. It's federally illegal. There's no way federal funds are going into these companies. So that's just, I think people have to accept that. Hey, the good news is there's good demand, and these companies should be able to survive. Many of them. Some of them won't, unfortunately. If you're a mom and pop serving Las Vegas, you may not survive, for example, or whatever. But I don't want to be so negative. I think there's a big positive takeaway. The fact that so many states said cannabis is an essential service is certainly a good long-term driver for the industry. The cannabis industry is rising to the occasion. Like just today, Cresco Labs put out a press release. It seemed a little fluffy, but I understand why they did it. They're hiring people from the restaurant industry. They are spending money at local restaurants to have food delivered to their workers. So this is a big takeaway. Some cannabis companies have the opportunity. They're already being called essential. Now they can really prove themselves. And this paves the way, most likely, in the future for more states to legalize. And I have to say, I'm trying to be positive here, but one of my big themes, I probably discussed it with you the last time I was on, was how we were going to see more legalization this year, but at the legislative level, like they did in Illinois. Well, New York was going to be one of those states, and they got bigger fish to fry right now, and they can't get it done right. And by the way, I would much rather a state go slow and do it right than to not do it right, like California, Massachusetts, and 2 years later for all these businesses to be going out of business because it wasn't done right. So it'll get done right. If you're a long-term cannabis investor, you guys didn't even ask me if there's any safe spots. There's one. I'm not going to tell you right now, but I've shared one with.
Oh, we want the safe spot.
No. Safe spot. You got to be a subscriber.
All right, we got to subscribe.
Joel's
product. He's got a safe spot.
Wait, Alan. One more before I let you go. It's a little bit off topic, but so one of our listeners in our chat is asking if you recommend that they continue pursuing their Masters of Science in Cannabis Science slash therapeutics.
Sure. So, I think this is one of the biggest challenges for the cannabis industry that, we're going from a baggy industry where people had their man and we get their bag. It wasn't tested. They didn't know exactly what it was. And, fast forward now, you have consumer products. And so the people that are hiring are not, illicit people breaking the law. And I don't want, some of those people broke the law to help people. So I'm not trying to denigrate them, but there are a lot of, real scumbags out there, profiteering with an illegal substance. So whether it should have been or not, that's what they were doing. But going forward, last week, Charlotte Fiji died. And some of the listeners may not know who that is, but she was on the Sanjay Gupta documentary Weed in 2013 as a success story. And she passed away last week, I think at 13. She had been essentially cured of her epilepsy, and when nothing else had helped her. And this was done without science. It was trial and error, right? So the future of the cannabis industry, both on the truly medical side, like the GW Pharma and finding cures for problems and running through the FDA, or the health and wellness part, like Charlotte's Web, the company has done, and they're doing research as well, or just, the consumer packaged goods companies that are evolving, that are just trying to deliver constant similar outcomes. That's been a big problem for the industry, right? Like you buy something and this week it makes you tired, this week it makes you hungry, this week it makes you ecstatic. So yeah, cannabis science is not going away, and there's a big role for it. So I think that's a great thing to pursue.
All right, Alan Brochstein is the author of the 420 Investor, also the founder of New Cannabis Ventures. Alan, we always appreciate you coming on. Keep staying in your usual state of isolation, I guess. We'll talk to you soon.
Y'all stay safe.
All right.
Thanks, Alan.
All right. Always good to get Alan's broad thoughts on the industry. 8:54 here, Joel. How are we doing out there?
We're just climbing the wall of worry here. We're only down 8 handles at 27, 71, 75. We're just above mid-range on the session. Like to see what happens at the close. That 27.79.75. That's been our high close of the rebound. So we'll look at that as a potential exit point if you have some longs this morning, or if you feel like, gosh, taking a potential short. That's your big level, 50%. But I'm still just kind of feeling like, man, I think it's just going to be a tough day. Like, I'm not going to do, I probably will not do like a range extension. Like, if we take out that pre-market high, I don't know if I could go long up there, or if we take out the pre-market low, I'm not going to sell it in the hole. I think what, Dennis mentioned at the top of the show about, people looking to buy dips. I think that, you can see that as some stocks. If you have, like, you short JP Morgan going into earnings here and you didn't cover on the way down, how are you thinking going into the report? So I'm looking for a two-way market here.
If you're
Triple
short
D, what
JP
do you?
Morgan right now, you're probably scared. That's why the stock's trading higher here this morning too. I will tell you, S&Ps are down 8-9 handles here. There's a lot of stocks trading higher, significantly higher. Your oil stocks are all way up. ExxonMobil, 456,000 to buy. It's trading up 3%. Chevron has 129,000 to buy. It's trading up 2.7%. Most of your banks are all trading higher here this morning, probably because TLT is trading down just slightly. But if I look, like Bank of America is actually trading in the green, Citigroup is in the green, JP Morgan is in the green, Goldman Sachs is ticked down, but it's slightly in the red. But then you just look at other sectors. A lot of your dash for trash is still happening here this morning. Kohl's is trading up 6% here this morning. Same stocks, Macy's trading up 3.5%. It's like Groundhog Day, where they're buying all the stocks that were, very weak coming into this. Boeing having a fantastic morning, trading up 3% here this morning. House of Mouse Disney, 177,000 shares to buy here this morning, trading up 1%. I'm actually surprised the market is down at all. I would not be surprised if this market goes green.
Let's talk about Disney here, because they announced over the weekend that they're going to furlough another 43,000 union workers and going to keep a very small number on to keep the parks functioning, even though they're closed. There's a report in the New York Times that Bob Iger has essentially come back to running the day-to-day operations of the company. We'll pull up a chart of Disney here. And I mean, what do you guys think of this thing?
I love the business. I want to be a Disney. It's on my shopping list, but it's hard to buy it when the parks are closed. And it's hard to buy it not knowing when they're going to be able to open. And they've got to do layoffs because they've got to cut expenses right now because of all of these issues. So that makes it very, very tricky to just come in here and say, okay, yeah, I'll buy at 105 here. I think it's eventually going back to 140. There's a lot of problems. So I don't like buying problems. So the stocks that I've been buying, like I said, Microsoft, stocks that aren't having a direct hit from this, not at the epicenter. Disney, maybe not a cruise line, but they own some cruise lines. I mean, this is kind of still at the epicenter.
They're going to have to, once this is done and there's some normalcy here, they're going to have to bring their prices way down.
It's possible for a bit.
They're going to have. Dennis, you went there how long ago? For like
years.
A week.
It's crazy. It's a lot of money, but you know what they have? The parks are so full. I think the business will come back, but I don't think it's coming back in a week. It's going to be like Chipotle. It's going to take the consumer confidence to fly again. It's going to take the consumer some time to go and stay at a resort where there's people from all over the world going to.
Yeah.
That's going to take some time. So just to think that Disney's going to bounce back in the third quarter, I think is absurd. And honestly, I think there's no chance this thing bounces back in the third. Like the stock, maybe, but the company itself. And if you think the company is going to, its stock prices off the company, fundamentals to a certain extent, I think you don't have to chase a stock like Disney. It popped on the numbers, the nice numbers from Disney Plus, and that pop got faded as well. There's still a lot of underlying issues here. My shopping list has Disney on it, but it's not one that I'm wanting to strike today. I mean, stocks, that I've, obviously, I've talked, multiple times about the stocks I've been buying. It's stocks that are not at the epicenter for this. And Disney.
I will go back to Disney because I want to go to Blizzard Beach, and they have that huge slide. Did you do that, Dennis?
No.
That
the
huge
kids,
one.
It's like too young for that yet.
Straight down. So I will go and pay for that eventually when they reopen. it.
I'm willing to go back to Disney, but I want to wait until the doctors tell me it's safe. And that's the one thing too. You have the economists that want to reopen business and let's get it open for May. Let's, get everything going because the cure is worse than the disease. I'm telling you with my asthmatic child that I'm waiting until the doctors say the coast is clear. Even if they reopen everything tomorrow, I'm not hopping on a plane and going to Disney World. I will wait until the coast is clear. And I think there's a lot of people that are like me that are going to wait till the coast is clear, meaning the sales at the parks could be down for the foreseeable future.
Dennis,
2020 could be a write-off for the parks.
Dennis, I will personally take every person in the park's temperature if that'll make you feel better.
It doesn't. I already told you. You pop some
no.
Tylenol and your temperature goes down. That doesn't make me feel any better at all. Everybody keeps, take the temperatures, take the temperatures. If you're not feeling well, you probably take an Advil and aspirin or Advil or Tylenol, which is a fever reducer. So, I mean, even if you just think you got the normal flu, you're probably popping something like that. Tylenol cold and flu is easily available over the counter. People pop that. So I don't think it's like the safety feature that everybody else thinks. Oh, take the temperature, everybody's not sick. There's some people that take Advil when they're sick and they're still sick.
All right. On that note, I want to wrap it up for the day. Thanks to our guest, Alan Broxstein. Thanks to all of you in our chats, both on YouTube and on premarket.benzinga.com. For a replay of this show, you can go to our YouTube channel or catch the podcast on iTunes, SoundCloud, Stitcher, Spotify, or TuneIn. Go to benzinga.com/coronavirus for some real-time trackers on stats related to the virus and real-time headlines related to that as well. For a free 2-week trial and a subsequent discount to Benzinga Pro, click on the link in the description of this video on YouTube. Please remember all the information from the show is meant to be used as informational purposes only, not for investing or trading advice. Everyone have a great rest of your day. Be safe out there as always. And Joel and I will be back with you at the close. Until then, have a good one.